Good morning, people and traders. It's October 1st, right? The month is finally over and we're into a new month. The year is almost over and we keep chugging along. So, yesterday I had a lot of technical difficulties, right? People were talking about my stream being super laggy and I didn't know what that was from until I understood there was a nationwide internet drop as well. So far, can't complain right now from what I've experienced and what I've seen, so fingers crossed it continues. So let's take a look at what's going on. We have, right, some news from Jerome Powell yesterday. We had Jerome Powell coming in at about 2 p.m. Eastern time, and the markets got they got shaken up a little, and we saw a decent little rally into the close as well as holding well on the overnight. So let's take a look at what's going on there. We pretty much from Jerome Powell, there's a few little excerpts here from like Bloomberg that I'd like to go through and taking a look at the rate expectations going forward. Jerome Powell said that the central bank will lower rates over time, right, while again emphasizing that the overall economy remains on solid footing. Powell also reiterated his confidence that inflation will continue moving towards the central bank's 2% target, adding that set the table for further easing of price pressures. So far, right, he's trying to appear a little dovish without necessarily saying that he's like super dovish about things. I think he like kind of just mulled over the fact that there's going to be continued rate cuts, potentially aggressively, without saying that we're going to start cutting super aggressively. Looking forward, if the economy evolves broadly as expected, policy will move over time towards a more neutral stance, Powell said in his speech in Nashville at the annual meeting of the National Association of Business Economics. But we are not on any preset course, he said, noting that policymakers will continue to make decisions meeting by meeting based on incoming data, and a neutral policy is one that neither stimulates nor holds back the economy. The Fed's current benchmark rate, which officials lowered to the 4.75 to 5% range earlier this month, is widely regarded as still restricting economic activity. The remarks left open the question of how policymakers will approach the size and pace of interest rate cuts in the coming months, which is a very crucial matter for investors and just generally, right? Mortgages, right, loans, all that stuff has some dependency on this. So the remarks, the central bank lowered its benchmark policy rate by a half percentage point in September that we saw, the first reduction since 2020 at a larger than usual move, and officials have described the outsizing cut as one aimed at protecting slower labor markets from further weakening. We still have a lot of employment and unemployment data towards the latter half of this week, starting tomorrow. You got it Thursday and Friday with the non-farm payrolls, which is going to be a very big event realistically. It's the first one since the rate cuts. And remember, bad news is probably going to be perceived as pretty bad news going forward, so we're going to see how this thing shapes up as we have inflation data the following week, right? Another big factor. So Powell on Monday described the labor market as solid, but said that conditions have clearly cooled over the past year, and we do not believe that we need to see further cooling in the labor market conditions to achieve 2% inflation, he said. Inflation has been tame in recent months, a trend reinforced by government data released. The gauge of price pressure rose modestly in August on a 12-month basis, and the personal consumption expenditures price index climbed to 2.2%. That provides officials with more confidence that inflation is moving towards their goal, allowing them to place a greater focus on shoring up the labor market. So Powell also said that disinflation has been broad-based, and recent data indicates further progress towards a sustainable return of 2%, right? So what we're looking at right now, we have a Fed meeting not this month, but the 7th of November. Currently, the expectations are widely perceived as a singular cut, meaning 25 basis points coming out, about 65%. There is a small chance about another 50 basis point cut, but there is still a lot of time and a lot of data until we actually get to that marker, so these probabilities can change realistically. Now, in terms of some of the other news, we have some news out of Tesla, if I'm not mistaken here. In terms of lawsuits, right, shareholder lawsuits alleging that Tesla overstated the efficacy and safety of its autopilot and full self-driving technologies, misleading investors, has been dismissed without prejudice. Shareholders failed to show that Tesla and CEO Elon Musk should be liable for antitrust lawsuit by the Federal Trade Commission after the company said that the regulators showed no evidence of harm to consumers. Now, Amazon's been pulling back a little more, and Tesla's been on a pretty strong rip over the past several weeks here. So that's adding to some of this upside momentum. I feel like if that went the other way, things would have gone wrong. Now, we talked about strikes yesterday in a very laggy update. Ideally, things are not lagging as today. On the East and Gulf Coast have gone on strike, their first walkout since 1977, blocking shipments at all ports from Maine to Texas that handle about half of America's ocean shipping. And the International